A lot of Vancouver buyers are sitting on the sideline right now. They are waiting for the interest rate to come down. They are waiting for prices to drop, and they are waiting for more certainty. And on the surface, that sounds perfectly reasonable. But what if waiting actually ends up costing them more money than buying today? In fact, based on what I'm seeing today in Greater Vancouver's real estate market, some buyers could end up paying tens of thousands more dollars simply because they are waiting for too long. And the surprising part, it has very little to do with the mortgage rate. In this video, I'm going to show you why buyers are hesitating, what often happens when the rate eventually falls, and why waiting for the perfect moment could become one of the most expensive decisions a buyer can make. Now, let's get started. Let's be honest, the hesitation makes complete sense. If you have been thinking about buying a home today, you probably ask yourself some of these questions already. Should I wait for the rates to come down more? What if price drop further? What if economy slows down more? Maybe next year will be a better opportunity. I hear these questions almost every day. And honestly, I don't blame people. Buying a home is one of the biggest financial decisions most families will ever make. A few years ago, buyers felt pressure because there were not enough homes around. Today, it is the opposite. There are more listings, more choices, more time to think, and buyers finally feel like they have the leverage. But here's what I find interesting. Just last week, I spoke with a family who has been looking for almost 2 years. Almost every few months, they tell themselves, we'll wait a little bit longer. When the rate increased, they waited. When the price softened, they waited. When the economic uncertainty appeared, they waited again. Today, they are still waiting. Now, there's nothing wrong with that. But here's the reality. The home they were looking at 2 years ago are no longer available. Some sold, some appreciated, and the biggest risk wasn't that they bought at the wrong time. The biggest risk was never making a decision at all. I think many buyers today are stuck in the same situation. And that's where things get interesting. Because everyone is waiting for the rate to fall before buying, what do you think will happen when the rate finally falls? Keep this thought. We'll come back to this very quickly. Here's what many buyers don't realize. When rates come down, affordability improves. But that's only part of the story. The bigger story is what happens to the buyer's confidence. Because once rates start falling, many people who were waiting suddenly decide it's time to act. The buyer who were renting, the buyer who couldn't qualify before, the buyer who were nervous, the buyer who were sitting on the fence. Suddenly, they all come back. And when demand increases faster than supply, competition increases. I've personally seen markets where buyers had months to think about a property. Then 6 months later, the same property will receive multiple offers. The property didn't change. The psychology changed. That's something many buyers underestimate. Most people think lower rate automatically make homes more affordable, but lower rates often attract more buyers. More buyers create more competition, and more competition can lead to higher prices. Now, I'm not suggesting prices are gonna explode. Nobody knows exactly what the market will do. But what I'm saying is that the very thing buyers are waiting for may be the same thing that brings their competition back into the market. And that's when the math starts becoming very difficult. Let's walk through a simple example. Imagine there's a condo available today for $800,000. A buyer decides to wait. 1 year later, rates are lower. That sounds great, right? But let's say the buyer demand increases and that very same condo is now worth $860,000. The buyer save a little on interest, but they are financing an additional $60,000. They are paying more property transfer tax. They are competing against more buyers, and they may no longer have the negotiating power they have today. Now let's look at townhomes. Imagine a townhome listed today for $1.1 million. In today's market, the seller might accept an offer below asking. They might agree to repairs. They might provide flexibility on completion days. The buyer has options. Now imagine rate drops and more buyers enter the market. Suddenly, that same seller doesn't need to negotiate as much. The buyer may end up paying closer to asking price or even competing against other buyers. Now, let's look at detached homes. This is where emotions become even more powerful. Many detached home buyers are trying to find their forever homes. And when the right property comes along, they are often willing to stretch. If rate falls and confidence improves, competition in certain detached segments could return very quickly. Again, nobody can predict the future perfectly. But here's the key point. Most buyers focus only on interest rates. They rarely think about competition, and competition can be just as expensive as higher rates. Now, here's the part that surprises many people. The smartest buyer I'm seeing today are not trying to predict the exact bottom. Instead, they're asking a different question. They're asking, does this purchase make sense for my family today? I recently worked with buyers who were not convinced that the market has hit rock bottom, but they found a home they love, the monthly payment worked, the location worked, school catchment worked, their long-term planning worked. Instead of trying to predict what the market will do next year, they focus on what they could control. And that's often what successful buyers do. They focus on their budget, timeline, their lifestyle, their family goal, not headlines, not predictions, not social media options. The reality is that nobody rings a bell when the market has bottomed. People usually realize it afterward. Now, before anyone jumps into the comment and say, so Michael, are you telling everyone to buy right now? Absolutely not. There are situations where waiting is the right decision. If your job situation is uncertain, if your down payment is not ready, if you are stretching too hard on your finances, and if you are simply not prepared for ownership, then waiting may be the smartest move. Real estate is personal. The best time to move is not determined by headlines. The best time to move is when your finances, your goals, and your lifestyles are aligned. What I'm saying is this. Don't automatically assume waiting saves money, because in many situations, waiting could end up being the most expensive decision of all. Now I'm curious, if you are currently thinking about buying, are you waiting for lower rates? Or do you think today's market actually presents opportunities? Let me know in the comment below. I read every comment and I love to hear your perspective. And if you're interested in Vancouver's real estate, buying strategy, selling strategy, and market insights, make sure to like and subscribe. I post new videos every week to help you make smarter and data-driven real estate decisions. Thanks for watching. I will see you in the next video, or simply, better go Mike.